Well, certainly a big headline out of the press briefing in the White House. Even though the president has warned about these tariffs, imposing them tomorrow, February 1, I think is probably at the shock end of the scale for most economists. But still, we have to wait and see, to your point, just what exactly are the details in this. The press secretary did say it would be 25% on Canada and Mexico and 10% on China. But we need to know, are we talking about all of the goods, the merchandise goods across the borders and come in from those countries? We need to know, will there be any exemptions for some sectors? How long will these tariffs be in place for? I mean, will there be mitigating circumstances where Canada, Mexico and China can plead their case? So there's lots of, devil in the detail on this. But taking it at face value, it would be quite a shock, because you're talking about, everything from food, avocados, my colleagues wrote about today, lumber crossing the border from Canada, cars and car parts go back and forward on both borders. And then, of course, when it comes to the US and China, I mean, obviously China is the world's biggest trading nation. They're the factory of the world. So, the whole gambit of consumer goods will be coming in from that side of things. Now, you can argue the toss about how much of an impact 10% would have, but I think the bigger focus right now is on that 25% level, Canada and Mexico.
Well, to that end, Enda, I'm wondering who you think absorbs the majority of these tariffs, especially those from Mexico and from Canada. Does it, in your view, happen that it's the consumer, or is it the company where it eats their bottom line? Who absorbs more here?
So there are a few parts in this chain. Number one, the question becomes, will the exporter or the producer selling their product cut their prices to factor in the tariff? That's one side of it. The other side of it is, will the buyer, the importer, absorb the tariff rather than pass it on? If they have good margins, can they take the tariff on board rather than pass it on to consumers? But to your point, and this is where economists say the rubber hits the road, in truth, these companies don't have those margins. Nobody's going to take a cut in their selling price, so these prices will eventually be passed along to the consumer, pass on to Main Street. Now, the Treasury Secretary, Scott Bessent, made the point recently in his hearing that there are mitigating circumstances. He made the point that the strong dollar can offset the impact of tariffs, and he said consumer patterns will change anyway. They won't buy tariff goods. There are ways around this. But, writ large, there's a question mark for sure over the impact of prices for consumers from tariffs.
I do want to point out the tariffs would mark the first wave of trade levies in Trump's new term, and their impact will ripple well beyond Canada and Mexico as other nations brace for the possibility that they may be targeted next, and as U.S. businesses await possible retaliatory measures. And this is the one thing that it maybe stops business from kind of moving ahead on something as they try to figure out the impact of it. Molly, I want to bring you back in here, because how much can the U.S. economy absorb if there is a bit of a tariff war or trade war here? And is it more of an impact on growth, or is it more of an impact on inflation?
Well, that's what we had a story out this week that was just examining that exact question. And the conversation this time around really has been about inflation, but that's because inflation is, of course, has dominated the conversation for the last couple of years here, versus in 2019, the first full year after Trump's first term tariffs were enacted. The inflation, quote, problem then was that we couldn't get up to 2% inflation, that it had been running so low for so many years coming out of the financial crisis. So it's a very different conversation now versus back then. What was really the concern that was starting to unfold was looking at how growth is starting to slow down in response to tariffs, how business investment is stalling, industrial production is contracting, those factory jobs are actually not coming back here, and how these are then going to be headwinds to growth. Of course, that all got very soon overshadowed by the pandemic, and we didn't really get to see the full effects of it play out. But it's a good lesson for this time around, and that's what our story was looking at as we just recently got new transcripts from the Fed. These are verbatim closed-door accounts that come out with a 5-year lag from those meetings that were in 2019. And we saw that it was really more the growth concerns rather than inflation that dominated the conversation back then.